Hi, everybody. Welcome back. Good evening, good afternoon, good morning from wherever you're dialing in from. Welcome back to Venture Capital TV, and it's from LATOKEN. My name is Sunny Mohanty. Today, I'm going to be hosting this episode of VCTV where we're going to discuss how to reach out to family offices for investments. So I'm also the regional director of LATOKEN based in Singapore. I've been hosting shows Singapore time, but today it's a different time zone. I'm very excited to talk about and host and discuss about family office investments. So let's have a quick round of introduction of the speakers today. And here you go. Hi everybody. Welcome back. Welcome. So I'm on a different time zone and still I'm very excited as much as before. So I'm going to start with Frederick. Frederick, hi. I think we've spoken before, have we not?
Absolutely. Yes, I've been on also the Singapore version. I'm usually on the US version normally, where I see Adrian and Gary all the time. So I am originally from Sweden. I do most of my business out of my London office. My experience linked to family offices is mainly to do exactly what it says, to how to reach out to them, how to work with them, and I have aspiration to have a family office myself in due time, but not soon.
Oh wow, that's great. Okay, thank you. Next I have Marin, and we are in the same time zone. It's 11 p.m. Hi Marin. You're on mute. Okay, Marin, 1 second. Let me just
Okay, now I have my audio on. Hello to everybody. So I'm spearheading a family office in Schweizer's growth capital arm here in Singapore. We are a dinosaur, as I like to say. So we are just 2 years younger than Siemens. We are older than Bosch, and we are older than Continental. So our roots go back to 1849. So that's quite some time. I'm keen on sharing my experience as an entrepreneur. I'm also a serial founder with our audience today from the lens of a family office here in Southeast Asia, active both in Europe and in Asia. So looking forward to a good talk tonight.
Thank you so much, Marin, and welcome to VCTV. Okay, next I have Adrian. Hi, welcome back. How are you?
Hello, Sony. Hello, everybody. Hello, LATOKEN family. Glad to be back as always. It's very entertaining to be here and educational in all directions possible between us, from us to the audience. I'm Adrian Niculescu, serial entrepreneur and investor. I actually work with few family offices in financing startups and two funds actually. I'm involved directly in few big projects. CloudCoin Consortium. CloudCoin is a post-blockchain digital currency. DAO1 is a decentralized autonomous organization. I'm also a mentor in Virgin Startups program in UK, and also involved in other projects. Happy to be here today and contribute.
Awesome. Thank you, Adrian. Thanks for being a part of this show today. Last but not least, Gary Fowler. Hi, Gary. Good morning.
Hi. Great
How
to
are you?
be here. Great to see some familiar faces and some smiles from the past and the present. It's great. My name's Gary Fowler. I'm a serial entrepreneur. I love artificial intelligence, quantum computing, cybersecurity, crypto. I write a lot. My next article, by the way, coming out in Forbes, actually I just got some revisions. I'm writing about how to keep your loved ones alive forever using artificial intelligence. And there are models out there, replicas. So these intelligent assistants that I talk about could take the form of a loved one, which will happen over time. Anyhow, so write a lot. I also have a couple shows. I'm on the radio in New York City on iHeartRadio. Had the actress friend of mine on the Founders Report in LATOKEN yesterday, which was really interesting because she looks like she's probably listening. So, Zen, if you're listening, you do look like Megan Fox. I don't care what anybody says. She really looks like her, and she's an actress. So, love artificial intelligence. I've been involved in 2 unicorns. I was on the original management team at Click Software, sold to Salesforce for 1.35, and also Eva.ai. Have done NASDAQ listings, and we help companies go global using Silicon Valley support from all over the world. And today we work in 24 countries.
Thank you, Gary. Gary, I've seen the interview today. I think you are absolutely right. She looks like Megan Fox.
She's like, it's amazing, yeah.
It
I was
it
in
was
shock
amazing.
when I first saw her. I thought, is this some
Oh.
kind of like prank show or something?
I know what you mean. Now that you said that, I was like, oh yeah, she
A
does.
lot
Oh,
like her, right?
yeah. All right, great. Thank you so much for the introduction today. So it's about family offices. So family offices differ from other investors in a variety of ways, I would say, from being able to deploy patient capital and having flexible investment mandates to bringing specific operational and strategic expertise to portfolio companies. So, like with other investors, obviously the pandemic, COVID-19 has presented and continues to present unique and evolving challenges and opportunities for family offices. So, unlike with other investors, the unique attributes of family offices provide unique opportunities to answer some of the challenges and opportunities. So, I would like to start with some questions to our speakers today about family offices. So let's just start with Marin, who is a family office herself. So, Marin, how to pitch um, to family offices?
She's on mute, Sonny.
Oh, again on mute again. Hello, I'm here. So I think first of all, as a startup, as an entrepreneur, you need to look a little bit into what family office are you talking to. Is it a multi-family offices? Is it a single family offices? How much is the family office still having their own businesses? In what vertical are they active? And from there, prepare the pitch. So it's pretty much like all early stage investments, from bootstrapping to crowdfunding to angel investors, looking how much is this family office an accelerator, an incubator, can we get venture capital, is it growth capital, long-term capital, or are there more CVC, corporate venture capital firm? I'll come to the points later in the show.
Sure. Thank you. Thank you, Marin. So, hi, Frederick. So, you're planning to have your own family office. So, is that a particular reason why would you do that? So, how do family offices invest in? Do they invest in funds or do they invest in startups, obviously? And how do they do that?
So just like Marin just said there, it's very, very unique. So everyone has got their own interest, and most of them have got a very long-term perspective. So it's more about preserving capital than actually creating massive like unicorns. So very much have that in mind. And for most startups, I would say a family office is not the best to work with because they might have very specific requirements. Having said all of that, I do find in the industry family offices doing all sectors, and I usually like to have a percentage of the whole portfolio towards early stage, even seed investments as well. But it very much varies. So how then to find out? Well, they often have an operations manager, and then they have a small team of analysts usually. And then there are other aspects which are not linked to investments, which I will not go into. Everything from like transportation, security, etc. But everyone is a bit unique. And you can read quite a lot about family offices, both online and also on books you can find easily as well, before you even start thinking about pitching them. And Adrian, I know we say the same thing, how to pitch to others. I leave all of that thunder to you, Adrian.
Right. So, let's just move to Adrian next.
I would say that there are no two family offices alike, because of course they have some models, but they are like fashion brands, they are unique because usually the family behind is unique and usually has a history. And before pitching, I would say to read a little bit about the history. Usually, when you are dealing, as Frederick said, with the team of consultants. I'm working with a London-based family office. They have like 20 people doing all the time research on investments. Huge team. So, of course, if you are fortunate enough, you can meet the people behind it, but usually at events, conferences. So you have a lot of gatekeepers. And it's very important the hook you are using to catch the attention at the beginning, so the conversation to continue, not your, let's say, your email or your message to be totally ignored. They don't think necessarily like the regular VCs because they're more conservative. And also, as Frederick said, for many businesses are not the right partner because they have a very strict due diligence, which is even more in depth than the regular VC companies are doing. And usually they want more than just to put to put money somewhere, and are not very are not how to say, their risk profile is low to medium, because in as in any business, the higher the risk, the higher the reward. But they are more conservative than the other type of investor. So when you are doing the pitch, you need to have this in mind, and also to calibrate your language, and to use some words which are not necessarily in the usual VC slang. So but it's a very interesting learning experience working with family offices, and you can grasp a lot of I don't know, the way of doing things. The rich people are doing things in a certain way, if you
Yeah,
if I can be understood correctly on that.
right.
You learn a lot of life skills, very sensitive skills, which can be taught in many other places. So it's a very rewarding experience.
Yes, how rich people work. Where do they invest? Thank you, Adrian. Gary, over to you, please.
Yeah, I mean, yeah, when I look at it, I'm there's a lot of where I am down in Florida in Palm Beach. There's a lot of ultra high net worth folks. I'm the poorest guy around, but there's a lot of really interesting people that are my neighbors. And one of the things, it's kind of like a really close society, and there's a lot of skepticism and I would say paranoia a bit, leaving people. Once you come in, you're in because you're talking about people that are there to preserve multi generational wealth. They could be the third generation of the family, and the idea is to preserve the wealth. So, but once you're in, it's a different world. It's a little bit different because what I find is they don't want to be inside of the business for the most part. They want to invest, and trust is really important. Most of the time for family offices, I get referrals. It's one family office to another family office that does a referral to give you that warm introduction. That basically vetting you coming in. But they're really interested in artificial intelligence and they're really interested in quantum computing. I can tell you that across the board because each one of them has the pain. Their companies have the pain. They personally have the pain. So they're looking at these technologies can help their companies grow. They're looking at technologies that can help their family offices attain the kind of returns that they need. So they're aggressive right now, and I see them from Africa through Europe to the U.S. I mean, they're active everywhere today. And in terms of the VC firms, the look at Venrock, it was founded by the Rockefeller family. So, and if you look at Apple and you start to peel it back a bit, not to be facetious, but you'll see that their family offices were involved in most of the successful companies. It's unbelievable, actually. So that's it. So the challenge is it's hard to get in, and you can get directories that talk about family offices, but it's really hard to get to them. You've got to have a warm introduction to get in, and once you're in this kind of secret society, and it's interesting. You got to be a little bit careful sometimes, because you'll see groups out there that purport to do introductions to family offices. You want to make sure you understand their track record, that they're successful, because sometimes there's a lot of BS.
Sorry. Okay.
I didn't know what else to say. I'm a country boy. If it's black and white and have horns, it's a cow. If it's BS, it's BS. There's a lot of BS out there.
Of course. Thank you, Gary. Thanks a lot. Okay, so family offices, I understand today, they want to invest directly, right? Rather than participate in blind pools. They take my experiences, they take selective bets with the deal to gain in-depth understanding, right? So I've been working with people in the space as well. So that's how it is. That's what my experience has been telling me, that every family office now wants to leverage their core expertise of building business from the ground up and forging a network of connections to help their portfolio. So I just want to know the impact of the COVID-19, the pandemic, on the current family office investments and their investment pipeline. How has this pandemic affected them? Because everybody's got affected. And so are they? I'm going to start with maybe Frederick with this one. Is that okay?
Yeah, that's perfectly fine. I would say in the pandemic, most rich people have got richer just because of the simple fact that we're printing money. So all assets, and if you are fairly rich, you do actually focus more on assets than on actually money. That means that they have got more money than ever to invest. So with that little dilemma, how can you invest safely in COVID times, and how will you find and cherry pick companies which actually will not only sustain but also thrive in this crazy new world we actually do live in? So yeah, just like all of my own investments, I find there is a risk reward thing that everyone is thinking about all the time. And my interaction with most family offices, they like to have very, very low risk, but they like to have very high reward in proportion to that risk. So that means that actually family office demands, from my experience mainly in real estate and fintech, they are more challenging many times even than venture capitalists. But
right.
They can also have the portfolio view that your company really fits in to the group, the portfolio of companies, other assets. So you can actually get a very nice leverage more than the actual money if you gain a good cooperation with them.
I think great points there, Frederick. Thank you so much. Marin, I would like to go next with you.
Anyway, just to comment on money. Money is a commodity. That's not a differentiator at all. If you are a VC or a CVC or family office, you also need to be attractive, have your own value proposition for your portfolio companies to attract the best entrepreneurs, the best problem solvers out there in the market. So it's not only a one-way. I wouldn't want to agree that family offices are more risk averse. It really depends on the focus and the scope of family offices. So to your question, what did we do at the beginning of the pandemic? We had invested in 30 plus companies pre-COVID since 2017 here in Southeast Asia, from C to Series A. So we pushed the brake pedal a little with the rationale to keep our funds available for our existing portfolio companies to do bridge financing if required, to be there as a helping hand, not only on the money side, as I just mentioned, but also on the management side. So we have seen a couple of our founders that have really encountered the first big hit. They've not had their company during the financial crisis or the bubble before. So they've been on pretty good track, and then the big hit, the complete reset. So it's been emotional stability that's important for us, management capacities, also helping them to reduce their work count and their talent base and place place their talent somewhere else in our portfolio companies, as well as money for bridging. So that's been our approach to it. But meanwhile, we are at 2x the speed pre-COVID.
That's great. That's great. I mean, then we all need that emotional support during this crisis. Thank you so much, Dr. Marin. I'm going to next move to Gary Fowler.
What was the question, Sonny?
Gary, you are on mute.
Can you hear me?
Oh yeah. So the impact of the pandemic on the family office investments and their pipeline for the next couple of years.
Well, the family offices are smart of doing just like Marin's doing. They get online and use it to their advantage to be able to scout for companies and partnerships and those kind of things. But they're not all doing that. Some of them are more interested in doing social gatherings, with society hours rather than get out there and really get their fingernails dirty. So it's the ones that utilize the medium wisely are really moving ahead. And the ones that looked at these, as I said earlier, some of these emerging technologies like AI, cybersecurity, and quantum computing, I mean, they're going to affect those companies in a really bad way if they don't do something about it, if they don't understand how to deal with data. Data is, if you look at where we are, I mean, look at what value each one of us has. It's a data. If you look at the value of the corporation, it's in the data now. Of course, there's manufacturing, et cetera, but the data is really important. How do you gain a competitive advantage? How do you be able to serve your customers better? How do you be able to develop different types of partnerships better? It's in the data. So that's where we feel that there's a great thrust that the family offices and the venture capitalists need to focus on. Yes, they're doing it. It's not just about, we talk about AI, but I'm talking about machine learning, empathy, compassion, unsupervised artificial intelligence, semi-supervised, but actually really solving a problem, not about algorithmic math, but actually solving a very serious problem. Look at the supply chain we've talked about many times, and the not being transparent during COVID. And I'm not going to talk about toilet paper. People are buying toilet paper again here in Florida, by the way.
Again?
Yeah, because hospitals are packed in Central Florida again with Delta virus. Yeah, it's unbelievable. So Delta, Lambda, and Iota. We had a rap concert here at a local establishment, and half of the employees got sick from COVID. It's unbelievable actually. But anyhow, but the good news is we have these online opportunities to be able to still reach other people, to be able to extend our reach globally. Those family offices who use that medium, Zoom, they're using StreamYard, as we are here today, Wirecast, those kind of mediums to get the word out. And, you need to make sure companies that are listening, make sure you have an online presence and you're writing a lot and you're doing videos and you're talking about your successes and you're talking about your company, because every time somebody sets up a meeting with you on a Zoom, they're going to Google your name as soon as they get on that call, and they're going to check in your LinkedIn profile, because they're not going to remember all the things about you, and they want to make sure they're precise. So make sure you update your information.
Absolutely. Totally agree. Thank you so much, Gary.
Sure.
Adrian, over to you, please.
In times of crisis, usually the richer get richer. The rich get richer, and the smart rich get even richer. And this is not necessarily only to the fact that there is money printed, but usually um, um, there is a small percent, like 2% of the people, including many family offices owners, knowing things that the rest of the population don't know. They have access to resources, networking, deals, and information is even more important than money, because you need to know where you invest. So the digital transformation affected the way family offices communicate more than ever, which is a good thing. And also, regarding the inclusion aspect, I believe that through the digital means, more entrepreneurs have access to this special category of investors. And also, we see many family offices at the first generation, because many very successful entrepreneurs, after they make a huge exit, they create a family office, so which was not in the tradition of their family, but that tradition is starting now. So it's a very interesting segment to study and to have the chance to cooperate with. But the main conclusion is that with COVID, they are doing better than ever before.
That's good. That's very good. All right. I think thank you so much for sharing those insights. So, when it comes to deal flows, so while a deal flow can be generated from several sources, the proposals that are likely to garner the most attention are the ones from companies or startup founders, entrepreneurs, where a previous investment has been successful, right? Or there is a solid existing relationship with other family offices. Unsolicited proposals from untried startup founders are likely to be given short shrift by most established investors. So we know we speak about relationships, right? And it's very much like, a family office referring another family office. It's always that's how the deal flow works. So what are the different ways these family offices are revising and rethinking investment and portfolio risk, and how they're balancing their strategies right now? Um, I'd like to go with Frederick again, if that's okay.
Yeah, that's fine. I'll just keep to the very fundamental basics, which is the whole communication aspect. I've got a book in my bookshelf I wrote a couple of years ago, which is Trust is the New Currency. Trust is very much what we're trading and talking about here. So if you have zero impact, zero relationship, zero anything, people do exactly what Gary said. If even that, they might Google you to do anything, or you might not even have the chance. So we have spoken about other investments than family offices. So the unsolicited approach, just like connect on LinkedIn and then drop a pitch deck, you need to do slightly more than that to
Yeah.
even have any traction at all, in my point of view. So most of them do get unsolicited things, but many of them are having a more active approach, where they now can use, for example, Zoom, just to filter things, etc., etc. So yeah, those were super general, holistic things, but the relationship, warmer introductions, any
Right.
kind of usual sales logic and relationship logic really applies more than
Yeah.
ever in this case as well.
I think you're right. Yeah, totally. Warm introduction relationships. Thank you so much, Frederick. Maren, would you like to add on to that?
I think there are various avenues to combine as a family office. So the more it's to the core business, the more you might want to rely on your own existing brand and just go on a selection and risk assessment, because your inbound deal flow is that solid that you don't need to go on marketing costs or sales. The more it's a way from the core business, the more that calls for partnerships, from my opinion. And that could be being an LP of an existing fund who has traction in a certain vertical or region, or tapping on other family offices while joining them in syndicate deals. So it's both worlds. But what I believe that each family office, and that might be a little bit new these days, especially with digitization, is you need to build your own brand. That resonates what we've heard from Gary. You need to be out in the market, tell your story, be updated. So the fully undercover family office might not get the best deals uh, out in the market down the road.
Yeah, undercover. Thank you so much. Gary, your thoughts, please.
Hold on. What was the question? Sorry about that.
So it was about rethinking, revising investment strategies, um, portfolio risk balancing strategies. So, what are family offices doing in this space?
Well, I mean, that's part of, maintaining your, I mean, Marin does it every day, right? It's, you got to look at where there's risk, where there's opportunity. You got to, one of the things to look at is, does a company generate revenue and how much? What's the growth that they project over the next, 3 years? Do you like the team? It's the simple kind of, whenever you make an investment, do you like the team? Do they have the right product at the right place at the right time? Are they leaders or followers? Where are they set up? What's the valuation? Is it a good deal or not? Do they want too much for the, is their valuation too high? I mean, just the simple kind of things. At the same time, part of what happens, Sonny, it's like 5-9, right? The founder of 5-9, they sold the company for 14.7 billion. And I had him on my show recently. We had a deep discussion about it. And he started in his apartment in San Francisco and people didn't believe in him in 2008. I mean, it's, do you really believe that entrepreneur is passionate about what they have and how are they dominating the space? Look at WhatsApp, right? That happened with Jan Koons. So, part of it's that. The other part is there's a lot happening in the market today from all parts of the world. I mean, we just had a company that was sold 2 weeks ago. And, we're mining company. We're looking for companies all over Africa. We're looking for companies all over the world in places other people aren't. We need to do that more. On one side, it's about creating opportunity so people can help their families. But I'm not talking about entitlement. I'm talking about opportunities, because on the other side, these are companies that are ready, in some instances, ready to go global. And at the same time, not a lot of people hear of them. So go where, I remember Scott McNeely, the founder of Sun Microsystems. I had lunch with him out in California. I know him. And he said, one of the things in life to be successful as an entrepreneur is go to the places that you fear the most, because you're going to learn the most and you're going to find the greatest opportunity. And I've used that for many, many years. And I told him 2 years ago when I had lunch with him again about it, but it's true. You got to go to places where other people aren't.
Absolutely, absolutely. Thank you so much, Gary, for that, for those insights. I think next we have Adrian.
A warm introduction, which is also accompanied by framing. By framing, I understand, okay, when I recommend you, I also make an introduction to position you in a certain way, help a lot, because in many occasions you can find family offices in close clubs, but there is other thing which could work called persistence. So I will advise anybody, if they have a good project, a solid idea with a great potential, not to be afraid to do a cold pitch. You can search a lot of information on Google and you can find the key persons, or you can ask other people to find out the correct contacts and to pitch, no matter if everybody else is doing that. Okay, if you will send something, they will ignore you. you need to be recommended by somebody. So your focus has to be on the quality of what you are doing, and after that, don't be afraid to cold pitch. And sometimes doing cold
Frederick.
pitching is very it comes with a lot of uncertainty, even some fears, and it's freaking uncomfortable for most of the people. But as Gary said, when you do things you are not comfortable with, or when you are doing things you have fears around, you are able to grow and to learn a lot of things. And I don't know, maybe the law of attraction will get you the best family office for your business. So don't be shy.
Okay, cold pitching. Frederick.
Yeah, I'll share with the world something I don't talk about all the time. I used to be in special forces as an officer, and
Oh,
later
wow.
intelligence service. So think about guerrilla marketing. Think about doing unusual things. To
Yeah.
build on what Adrian said, that how can you get in front of a person? I mean, I have used this to get in front of people who I never should have met otherwise. Creating a meeting or do whatever it takes to get to the top man and avoid all the gatekeepers. You will probably be way more interesting than many other people by just that approach in itself.
Right. Thank you. Thank you. So be brave. Don't be afraid of anything. So that's the takeaway. Oh, sorry, one second. I'm just trying to pull myself. Okay. So family offices which are active in the startup space are usually very sophisticated, right? We agree, with lots of connection, knowledge, and investment capabilities to nurture these risky assets. A good question. Where do I find them? I mean, besides VCTV, where can I find these family offices? Frederick.
Right, I got the honor to go first again. Right, I need to adjust my position and think about the answers. Where to find them? Well, uh, number one, most of family offices are founded by families who got like ballpark 100 million and upwards into the billions. So who are they? It's quite easy to find the billionaires on paper, but how to find them? There are clubs, there are communities, there are events. There are, for example, if you think about like a fundraising events, there are places where they like to be. They as the main people behind the family office. But it is set up, the family office, often with a purpose. There is an underlying very big asset. So it might be, for example, many of the Swedish strong companies might take H&M as an example, because I know they got a family office. They have an underlying asset, but then in terms of where should we invest all of the other money, that's a specialist knowledge. So the specialist knowledge is usually not the founding member of the family office. It's usually a team that is doing the investment part of things. So that is
Great.
roughly an answer.
Great points. Great points there. I think next I'd like to know Gary. Gary meets a lot of high net worth individuals. Gary, besides VCTV, where do you find them?
Well, I mean, I'm like Forrest Gump. I bought the smallest house in Palm Beach, like literally the smallest place at the Polo Club. And so a lot of these people do equestrian sports in the wintertime. And I see them in the restaurants. I see them, I don't want to name names, but literally some of the wealthiest people on the planet. And you become friends with them. You start laughing and doing things and hanging out. And the word gets around. What do you do for a living? Well, I'm into I've seen them, by the way. Some of the I was at a dinner at the equestrian. So we have a VIP lounge at the equestrian polo club here. And I happened to be there. And I saw one of these people Googling my name. And it was really funny to watch this person that's really famous Googling your name at dinner. And I was smiling. I had a couple of drinks, so I was probably smiling a little bit too much, but I was smiling because here's a person. Why in the world would they would you'd never think they would do it, but they do. And so one of the things that I did, and he may be watching today, is I got one of the top horse brokers in the world to be on the board of my company. He sells his horses to some of the wealthiest people in the world. They're his friends. So, I mean, you need to have a good introduction. So put yourself as, who was it? Adrian, you know, the law of attraction, put yourself out there and be careful what you ask for, because you're going to find it.
Right. Thank you so much, Gary. Thanks a lot. Okay, Marin, Dr. Marin, do you have this private closed door events where only family offices are meeting other family offices? But obviously you came on VCTV, we got access to you. But otherwise, if there was no VCTV, how would you reach out to the startups, or how would these startups reach out to you? You are on mute again, I guess.
So here I am. So you only need to know one family office, right? Because if you are in the club, you can just leverage your credibility if you did business with one. That's how it works, basically. But certainly what Gary said is right. I suggest run a systematic approach. Look at the company registries for capital inflow, the new ones that have been founded. In the registries, you might be able to figure out if it's a family office, a holding company, or so forth. And then from there, you go and reach out and hang around in the places where family offices hang around. So that might be yacht clubs, that might be polo clubs, that might be golf clubs, that might be just interesting events. Don't forget charity too.
Right. Got it. Great. Thank you so much. I'm just a little conscious of the time because we've got somebody who is going to share his sort of presentation. He's going to present his project. So Gregory, before start presenting, a quick introduction about yourself, and please try to keep the presentation to 5 to 8 minutes. We are going to circulate the pitch deck after the session. I'm going to email each of the investors today and the speakers here your pitch deck. Try to keep it to the point and short. Over to you. I'm going to share your presentation as well. Gregory, over to you, please.
Okay, thank you very much for your great advices. Unfortunately, I did not have these advices before I did my pitch, but that's okay. Let me introduce myself very quickly. I'm French and I'm living in Belgium. I'm involved in a culture and festival during the 10 past years. And now we created a new token, a revolution token, would be changed the industry of the beverage all over the world. So let me share my screen.
Yeah.
It's everybody see that?
Yes, we see that.
Okay, so let me introduce the Selva company with the SBA token, which revolutionized the beverage world industry. So first of all, I would like to show you a little bit quick video to understand how the Selva machine works. So it's a beverage machine who works with the cryptocurrency. This is the current problem we meet in the industry. For the customers, there is a lot of waiting time in the queue in the file to have a drink. Bar and pub loss of money due to the theft and waste, because a lot of barmaid used to pour next to the glass before to put inside the glass. It's around an average of 25% wasted in Belgium. So providers have a 70% payment of invoices from bar and pub, and manufacturers have a logistic and after-sales service problem. The self-bar system resolves all these problems, and we resolve also many more, but this is the main ones. How it works, we don't sell the machine, we give it for free. It's available for free of charge, and we just graft on the industry. So we already work with DAV equipment in Antwerp, Belgium. We have the manufacturers of the beer pump in France, Belgium, Luxembourg, and Netherlands. So we already have the market because we solved all the problems they have, and they they give us all the portfolio clientele for free. So they enable to build and install 100 machines per month for now, but the target is to have 50 manufacturers like them, enabled to build and install 40 machines per month. So around 20,000 machines per month in Europe, Africa, and different continents. And because we are a very good client, we strongly increase their sale and service, and also we offer tools that optimize their logistic. So the cashless payment system is enabled in every country because it works with the S-bar token. This token allows the cashless payment with a smart contract integrated. At the moment, the customers paid is beverage centiliter per centiliter is debited from his card, and the establishment, the provider, self-bar, and the maintenance are credited in the same time, in real time, because of the blockchain and the smart contract technology. And self-bar take 17% on every table turnover. And to supply customers with S-bar token, self-bar company machine will buy token on the crypto market. So we can say like the consumption indirectly trigger the purchase order, and the machine self-bar play the role as the market maker on the cryptocurrency market. So S-bar is a new generation token. The value of the token is supported by the turnover of the machine. Is not exactly indexed, but is something like this. So it's supported by the sale of the beverage, the sale of the big data collected by the machine, because our machine collect big data on festival, on stadium, and we sell this big data to the drink brand like Coca-Cola company, Heineken, or AB InBev company. And also we have turnover by the logistics support of the beverage industry. So S-bar is like a drink voucher with a constant increased value. Let's have a look with the beer market, for example. This is the world market of the beer. They have more than 566 that represent more than 2 million machines for them. If we only have 1% of this market, that represents more than 100 million turnover per month, okay? And this is just for the beer, but our machine could work with soda, soft wines, juice, coffee, tea, water, every beverages, okay? More we have machines, more the value of the S-bar token will increase, because there is a correlation. So for the next year, we plan to have 100 machines first, and the S-bar will be increased at $5. At the moment, you can buy it in the private ICO for 70 cents, okay? And it will be listed on LATOKEN next week for €1.50, okay? And on year 2, we plan to have 20K machines all over the world with a token value at $20, and it will increase higher and higher every year, okay? So thank you for your attention. I hope I will be clear. And if you have questions, I'm here.
Thank you so much, Gregory. That was quick. Thank you so much. I think it's a very good barless self-bar. So any questions, Frederick?
Main question is, are you looking for people to invest in the actual new tokens or into the actual business? Two slightly different questions.
In fact, we have the two solutions. We have a private ICO if you want to buy the S-bar token. And if you want to do also to invest in equity, it's possible. We create also an STO, so it's a security token offer to invest if the Barseco company, which is the company sister of Selva.
So Gregory, what he means that if you want to invest in those machines that you manufacture.
Not exactly. The manufacturers are working for them, and we pay the machine, and they give us all the clients, because our system is better for them in the after sales service, in logistic, and it's very practical for them. So normally when we have manufacturers for the heavy equipment, for example, in France, you can install more than 2,000 machines per year for them for free.
So what are you raising funds for? Sorry, I'm a little curious because I like the business model, but still unable to understand it correctly. So what are you raising funds for?
We are looking for 2 million euro at the moment.
For?
2 million euro.
Yeah. So these funds are going to be deployed where?
It's deployed to buy new machines, and also to buy some SBAR token on the cryptocurrency market, to make the market maker, because the consumption is a utility token. Without this token, we can buy the consumption. So basically, we want to have more employees, to have more manufacturers all over the world, and also to buy some machines. But we already have the ING, so is ING Bank, to follow them for the financement of the building machine construction, the building machine.
Any questions from anyone else?
Gregory, thanks a lot for sharing your concept with us. So as you mentioned just before, you intend to raise 2 million. At what valuation are you doing that? For what? First question, what valuation? Secondly, what do you want to spend the money for? Beside being the market maker. This one I understood.
Yep.
And how did you finance yourself until today?
For the moment, we already raised 3 million token by just private investors. So it's just friends and family. And now there is a 2 million token left. The valuation of the company for the moment is just 10 million, but it's just the beginning, because at the next March, we build new machines, and we will have new markets like Germany, also Africa. We are also in discussion with Africa, and I think when we will have more territories to install our machines, the valuation of the company will be updated for sure. And the money is spent just on the machine priority, to build new machine, and to have employees to train manufacturers to how to use our system. And it's really something really easy. You just have to plug in our system on the machine who already exist.
What kind of recurrent revenue model do you have in mind? Or do you already have recurrent revenues via subscriptions or others?
No, our revenue model is to take a fees of the consumption. We take 70% of the consumption of the beverages of the machine, and also we sell big data. Our machine has collected big data, and I can come to see a Coca-Cola company and say I have habit consumption on the festival, for example, and it's better for you to sell the Coca-Cola with more pressure, with a temperature colder. And I have the number as the file on the data to have it, and I can sell it to them. So it's also a big cherry, like we say in Belgium, big cherry on the cake. And the target for them is to have 50 manufacturers all over the world. And I think the valuation of the company as when we have that, it's 1 million. So the target is to be unicorn, clearly, with
That's
this
good.
market.
That's good. That's good. Any other questions from anybody else?
I have a question. Gregory, first, thank you for the presentation.
Thank you, Adrian.
The main hook of the project, as I saw it, is that allows the suppliers to be paid very fast, which is very important.
In real time, yeah,
I'm
exactly.
asking, yeah. I'm asking if you feel that having your own token is mandatory or not, because it adds a little bit of hurdle for the clients, for the buyers, and usually these are casual buyers.
Mm-hmm.
Not all of them are tech savvy, so it's a little bit complicated. They need to purchase your token and make the payments. I would have
Yeah, that's a good
seen
question.
very yeah, I would have seen a very good use case to allow people, let's say, to pay, I don't know, by card or even crypto, and in the back end using blockchain or anything else to make this faster distribution of funds,
Mm-hmm.
without necessarily having your own token. Of course, both versions could work, but my question is if you think that it's mandatory to have your own token or not.
So it's a very relevant question, Adrian. Actually, we're talking about the token with investors. With our clients, like pub and restaurant, we're not talking about that because they are afraid about the cryptocurrency. For them, the cryptocurrency is just we talk sometimes about blockchain, but it's just the technology behind the service and the customer experience. Just the judge wants to see the payments it's made in real time. So when they have the app Selvar app on the smartphone, they see the fund coming in real time in the wallet, and they don't want to know if they have a cryptocurrency behind this. They say, okay, it's working. Okay. For example, in Turkey, it's the government forbidden the payment with cryptocurrencies. And if we have the markets in Turkey, we won't talk about this. People will pay with the fiat currency of the Turkish, but they wouldn't know they have a crypto behind this, just for the technology. Just the technology, because it allows smart contract who pay to do the breakdown in the real time. And
And another
about the
question, do you,
mandatory, we are working with the lawyers, and at the moment he's working with his colleagues to have a mandatory of the financial authority in Belgium. So I think in January we will be able to talk in public about our token to if people want to purchase it. At the moment I can do this also in private. I can do it just in private, but in January, I think we will be allowed to do it in public with the mandatory of the financial authority in Belgium.
and another question is regarding the machines. If you have like any patent regarding the machines, the business model, or something like that, any intellectual property, or is just a white labeled machine with your logo on it. So I was asking from the competition perspective, how
Mhm.
duplicable is this business? You know.
So we have just a white label at the moment because the creator use the blockchain. He combines blockchain, IA, IoT, big data, and automation in the same time, and he push the technology very far in the same time. And he's not working with Linux or Windows. It's his own technology, and you already have the market because the machine already exists for the next 10 past the 10 next years, but now we just update the machine with the blockchain. And if we want to be a competitor, I say good luck, because you need to have the network, you need to have the technology, and you need also to have the market. And we have the three of us.
Okay, any other questions, please?
Thank you very much.
Thank you very much for your attention. Thank you
Okay,
everyone
great.
for your question.
Thank you so much, Gregory, for your speech today. I think we all liked I liked your project. I think obviously everybody's intrigued. I haven't seen a startup in this space using cryptocurrencies where the users really do not know that the cryptocurrency is there. So, which is good. Thank you so much. Let's just quickly take some closing remarks. Where can people find you, Marin?
Type my name, Google me, LinkedIn me, or just type the webpage you just see there. You can also upload your pitch deck if you want to share your thoughts with us, and then we'll take it from there. We are a small team. We are very fast. Happy to be here, and maybe we are just your first door to family office world.
Thank you. Thank you so much. Frederick, where can people find you?
On LinkedIn. That's the easiest way to find me.
Oh, that's the only place, not VCTV?
I'm more. Well, I'm here all the time anyway. On VCTV
Thank
as well.
you. Thanks a lot. Adrian.
Besides VCTV, of course, and LinkedIn, all my social media accounts are adrianiculescu.com, so it's very easy to reach me. Plus, of course, the domain. I'm answering to all messages. Not all the time. I'm very fast. Happy to help in any way I can, and of course to come back into the family at VCTV, which is a very, very important educational initiative. I'm happy to support anytime.
Thank you so much, Adrian. Gregory, I'm going to send your pitch deck to all the speakers of the panel today.
Thank you very much.
Congratulations and all the best for your listing, which is coming up soon on LATOKEN. So thank you so much, Frederick, Adrian, Dr. Marin, and Gregory, and Gary, who's had to go for another meeting, for your participation today. I hope to see you again on another episode. Till then, good night from Singapore, and keep smiling.
Okay,
Bye-bye.
see you.
Thank you.